Good morning. Now, the figures out today could suggest to some investors we should be buying shares of companies that rely on China demand. However, yesterday we saw a big sell-off of China stocks, concern that the government is going to tighten monetary policy. What's your take on China stocks and exporters in general?
I don't know about the day-to-day frequency of the movement in the markets, but I think on a relative basis, Japan's the place to be in 2010. And as most of your investors know, the market was a significant laggard among developed markets last year for a number of reasons, but two principal reasons, including the huge amount of equity financing in the fourth quarter, which is now finished, the largest in 20 years, as a matter of fact, and the strength of the yen. The yen average was 93 yen to the dollar in 2009. The last time we had a huge spike in the yen, which was 1995, the average rate for that year was 110 yen. So those two components of the economy really made Japan a laggard, and foreign investors were not in Japan, and I think they're coming back. So.
A bit of concern, though, John, about what's happening with spiraling debt. S&P yesterday cutting the rating outlook for Japan's debt. The government saying that that's a wake-up call. It is going to get its house in order. How concerned should investors be about this?
Well, I would point out two things. First of all, compared to the United States, where China and Japan they issue a lot of debt outside of the country, 96%, 95% of Japanese bonds are held internally. And if you look at it like a household, it's like you have a frugal husband and a wife that's a spendthrift, i.e. corporations and individuals in Japan are very frugal. They have a huge amount of savings, and the government is largely indebted. But as a household, Japan, it looks okay on a balance sheet, whereas in the United States, the consumer is stretched and the government is stretched. So I think it's a different equation. Sorry, go ahead.
You talked about the frugal housewife of Japanese companies. We saw machinery orders falling, I think it was the most in 2 years, and that indicates spending going forward. Are we going to see that frugality continuing? And is that a good thing in terms of balance sheet, but a bad thing for the companies that are supplying this equipment?
I come from the point of view that 2010 is going to be a pretty rough year in global markets. And the sugar high that we've had for the last 18 months with governments pumping huge amounts of liquidity in the system is going to be challenged this year. And if that is the case, on a relative basis, Japan should do better than other large developed markets this year, in fact, as a safe haven, if you will. The lack of indebtedness by corporate Japan compared to other countries, the fact that the market has not done very well, it may result in Japan being a safe haven compared to other markets.
John, Bernie in Hong Kong, you know, you and I have had this chat many, many times about the relative value, about the fact that people didn't go ballistic and overshoot in Japan. I mean, it's trading at what, one-fourth of its high near 40,000 back in 1989 during the days of the bubble. But the math that you cite works. The math that you cite definitely works. You know, the debt reduction, the shareholder activism, which has led to rejuvenated dividend payouts and that sort of thing. But, you know, more overriding is the sense that Japan has become a slumbering, slovenly monster, slow to react. They've tried so many things on monetary policy to spur demand, and nothing seems to be working. It's almost like they view Japan as an anarchical country, which is sort of guided by events which they don't really have control over. That's the reason, isn't it, that people have really veered, cut a wide berth in Japan. The math works, but, you know, people don't think according to fundamentals. They think with their heart.
No, but Bernie, you're right. I can't argue with that fact. And but the point is, in the last 18 months, particularly since March of last year, there were a lot of investment options other than Japan. You had emerging markets that went ballistic on the upside, parabolic in some cases. You had the S&P, you had Europe, you had almost every asset class in the world rising. Commodities, bond yields in the U.S. went from 2.2% in the beginning of 2009 to 3.8%. That's a 60% rise in bond yields. The one large asset class that has not moved is Japan. So I'm suggesting that is a relatively safe bet versus other markets in 2K10.
Top down or bottom up, John? How do you do it? Do you just buy an ETF, a Japan growth fund, and lock it away in the safe?
Well, if my views are correct, then you might want to short other markets, go long Japan. That's one arbitrage. I would also argue that large IFA investors, large global investors, have been significantly underweight Japan for the various reasons you mentioned. And as allocations shift to Japan, it should do better than other markets. So that's the call. It's not a secular bet that Japan's in a new bull market, Bernie.
Okay, we're going to be hopefully we'll be talking about this theme. We'll get some resonation and little traction as the days go by. John, my friend, you have a good rest of the week. John
Thank you,
Alkire.
Bernie.